Our next guest has a buy rating on BHP shares. He's Glyn Lawcock. He's head of research at UBS Australia Securities, and he joins us now. Glyn, thanks very much indeed for joining us. You like this company. Would you like it if it gets potash?
Good morning to you. I guess the question is, at what price do they get Potash Corporation at? That will determine whether I like the deal. I think at the current offer of $130 a share, I think there's value there. I don't think they'll get it for $130 a share, though. So the question is, what will they ultimately pay?
Yeah, they're not going to get it for that, is what the thinking is. What about an offer of 160 or even 180? I believe that the chief executive there of Potash says that it's derisory. The current one, anyway, on the table.
Oh, of course. I mean, the opening bid, I think, BHP's now made its intentions clear. I think they like the industry. It's a tier one industry. It fits exactly what they've got in terms of long life, low cost assets. That goes without saying. In terms of what ultimately they can pay comes down to your view on the right long-term price for potash. We would view that at $400 a tonne for potash long term, therefore the current price is probably value neutral. There's probably a little bit of upside there that BHP can extract, a little bit of synergies, a lower cost of capital compared to Potash Corporation. So I would think somewhere around 150, 160 is probably an offer that BHP may move to.
Yeah, if they move to that, what sort of impact does that have on its credit rating?
Look, I think at this stage, given the cash generation, and we wait to see BHP's result next Wednesday, which I think may surprise on the upside, I think that its slight increase, which would be another 15% bump on what they're currently offering now, I think probably wouldn't put too much pressure on their balance sheet.
And what about the build versus buy argument here as well, Glyn?
Yeah, look, that's a very good question. I mean, BHP made it pretty clear that they wanted to build a position in potash. When asked that question last night, the response was, well, yes, we're still happy to build, and we are still planning to build, but we've got more cash than what will be deployed simply through the build phase. So we're now looking to establish an even stronger position now, because our cash generation, I think that's what's important to understand, is that the recent movements in commodity prices, the change in the pricing paradigm for iron ore and coking coal has seen the cash generation in BHP move up considerably. And now the balance sheet and the cash flow generation enables them to both entertain the build and buy scenario.
Glyn, when we look at all this as well, of course, it's based on what you were talking about earlier, the price of potash. Is it a one-way bet, given the population growth in the world?
I think there's two time frames you have to think about. I mean, right now, the price of $400 a tonne is probably a little bit artificial. There's a lot of excess capacity in the market for potash, but it's being kept offline to support the price at $400 a tonne. I mean, the marginal cost production is probably closer to $200 a tonne. So if you actually brought everything on, you'd actually drive the price down short term. But I think we have to remember that BHP Billiton is not a 5-year company. They're a 20-plus year company, and they'll be thinking that if we're successful in acquiring Potash Corporation, we have to think about what is the incentive price for potash on a 10 to 20 year plus time frame, not the next 5 years. So, I think it's too early to tell. I think short-term prices could go lower if BHP were successful and brought on production. But I think longer term, we have to think about what's the incentive price for what will be quite expensive greenfield production.
Glyn, I want to talk to you about Marius Klopp as the boss at BHP. He seems determined to get one mega deal done. And how important is that for him to leave his stamp on BHP Billiton?
Well, I guess we have to put this deal into context. It's not quite a mega deal. I mean, it's a $40 billion acquisition, but we're talking about BHP Billiton at a $200 billion company. So it's really only a 20% of their current market cap. So it's not quite the mega deal that the merger with Rio Tinto would have been if they'd been successful in pushing that through in the last couple of years. I think this is about BHP
Glyn.
saying, okay, Yep, sorry?
We're out of time, I'm afraid, Glyn. Thank you so much for joining us. Glyn Lawcock there joining us. He's from UBS.